In the year 2000, two Chinese entrepreneurs came together here in Beijing to launch the internet startup Baidu. Over time, it would become China's most popular search engine.
When you hear Baidu, you probably think of search engines or chatbots. But behind the scenes, Baidu has been quietly building its own AI chip unit called Kunlunxin, a project that began inside the company over a decade ago.
Baidu is scaling up its Kunlunxin series. These chips are not the most powerful in the world. They cannot compete with Nvidia's high-end chips, but they can get a lot done. More importantly, they're improving fast.
It's valued at around $3 billion and is preparing for a stock market listing. Let's look at why a search company makes chips and what that means for China's AI push. Kunlunxin. China's AI boom isn't just about algorithms anymore. Increasingly, the real power lies in who controls the chips behind the models. And among the companies racing to build that foundation, Baidu has taken one of the boldest steps by creating Kunlunxin, a chip unit focused entirely on designing accelerators for large-scale AI workloads. While the broader public pays attention to chatbots and dramatic breakthroughs in generative models, the companies building these systems know that none of it works without reliable, efficient, and scalable hardware. This shift is exactly what pushed Baidu to develop Kunlunxin as a key part of its long-term AI strategy. Kunlunxin was born from a simple but high-stakes reality. Baidu's business depends heavily on artificial intelligence. Its search engine, ad matching systems, voice assistants, autonomous driving platforms, and content services all rely on large-scale deep learning. Running these models requires enormous amounts of computing power, and traditionally, this meant depending on foreign GPU suppliers, especially at a time when global chip demand keeps outpacing supply. Baidu realized that if it wanted consistent, predictable, and optimized performance for the AI models at the core of its operations, it needed to take control of the hardware that powered them. That idea eventually evolved into Kunlunxin, Baidu's in-house semiconductor arm. Instead of building general-purpose processors, Kunlunxin focuses on AI accelerators, chips designed for neural networks, model inference, data center-scale processing, and the kind of high-throughput workloads that drive modern machine learning. These chips are not meant for consumer devices or desktop graphics. They are built for cloud environments, for clusters that train and deploy large models, and for AI services that operate at national-scale user volumes. One of the strengths behind Kunlunxin's creation is Baidu's understanding of its own AI workloads. Companies like Baidu operate massive fleets of neural networks that behave very differently from gaming engines or consumer applications. Search ranking models, recommendation systems, speech recognition pipelines, and generative AI architectures each have distinct patterns of memory usage, data movement, and compute intensity. By designing chips specifically with these patterns in mind, Baidu can fine-tune the balance of performance and efficiency in ways that off-the-shelf GPUs cannot always match. This tight pairing of hardware with software frameworks is one of the reasons major AI companies worldwide are exploring custom silicon, and Kunlunxin is Baidu's version of that strategy. Another reason behind Kunlunxin's importance is related to global supply chains. In recent years, advanced GPUs have become harder and more expensive to acquire. Export regulations and supply bottlenecks have introduced unpredictability into the procurement of high-end AI chips. For companies operating at Baidu's scale, uncertainty is a strategic risk. Building Kunlunxin gives Baidu more control. Instead of waiting for overseas shipments or relying entirely on imports, Baidu can deploy AI accelerators designed domestically and deployed locally through tightly controlled supply chains. This does not mean Baidu abandoned foreign chips entirely, but Kunlunxin strengthens its overall resilience. Baidu has stated that Kunlun-based accelerators have been deployed in its data centers to support AI workloads, such as cloud services and large model inference. While Baidu does not publicly break down exactly which internal services run on which chips, the company has stated that Kunlun-based accelerators have been deployed in AI clusters, supporting parts of its cloud and machine learning operations. This gives Baidu a growing alternative to foreign GPUs for tasks where consistent supply and strong integration matter more than absolute top-of-market performance. Importantly, Kunlunxin does not appear to be focused on competing directly with Nvidia or AMD on the global stage. Its mission isn't to replace every GPU in the world or hit the highest benchmark scores across every sector. Instead, Kunlunxin targets a more focused objective: to be useful and reliable for Chinese customers and for Baidu's own cloud infrastructure. Many enterprises in China value locally supported hardware, predictable supply, regulatory stability, and ecosystem compatibility. Kunlunxin is built for this environment, not for a worldwide GPU war, but for a domestic AI ecosystem that is expanding rapidly and requires its own foundation of homegrown compute power. The creation of Kunlunxin represents a broader shift in China's AI landscape. As companies like Baidu pursue deeper self-reliance, domestic chip developers become more central to national AI ambitions. Kunlunxin is part of a wave of Chinese firms building AI accelerators to reduce dependency on foreign supply chains. Its growth shows how AI competition is evolving beyond algorithms alone. Raw computational power, who can build it, ship it, and scale it, is becoming just as important as the models running on top of it. Hardware has quietly become one of the most strategic layers in modern artificial intelligence. Kunlunxin's role reflects this new reality. It exists at the intersection of AI research, cloud infrastructure, national technology policy, and the global semiconductor industry. For Baidu, the division strengthens the company's ability to support its growing AI portfolio. With hardware it can deploy at scale. For China, it contributes to a more robust domestic technology ecosystem. And for the global AI race, Kunlunxin is one more indicator that computing power, not just clever algorithms, is becoming the key resource shaping who leads and who follows. Building strategic independence. Over the past few years, Baidu's investments in advanced AI made the company more vulnerable to forces outside its control. GPU shortages, shifting global regulations, and rising demand made foreign hardware an unpredictable foundation. That uncertainty pushed Baidu to rethink where its most essential technology should come from. As the scale of its AI models grew, the company realized it needed a stronger, more reliable base, one that didn't depend on volatile global supply chains or tightening export rules. That realization became the driving force behind Baidu's decision to develop its own processors. Running modern AI systems isn't just about training a model once and calling it done. Large search ranking networks, recommendation engines, and generative models operate continuously, 24 hours a day, across countless servers. Every query, every product suggestion, and every user interaction requires computing power. This means Baidu must secure not just top-tier hardware, but a consistent, predictable supply of it. Yet the worldwide demand for AI chips has exploded, making advanced GPUs difficult to source at scale. Even the biggest tech companies have had to wait in line, and Baidu understood that it could no longer rely on a market defined by scarcity. This is the heart of why Baidu started building chips in-house. When hardware availability determines whether you can deploy a new AI model or expand a service, relying on others becomes a strategic risk. Instead of gambling on shipment timelines or competing with global buyers, Baidu chose to control as much of its computing foundation as possible. By designing its own accelerators, the company can scale its AI operations according to need, not according to whatever the GPU market happens to offer. Another major force behind this shift is cost. Training and operating large models consumes enormous amounts of processing power, and renting or buying high-end GPUs is one of the most expensive parts of running an AI business. When costs spike, innovation slows. For Baidu, which depends heavily on AI-driven products, this isn't just a financial issue. It shapes the company's ability to experiment, deploy new systems, and stay competitive. Creating in-house chips allows Baidu to optimize performance and efficiency specifically around its own workloads, which the company believes can reduce operating costs over time. This kind of fine-grained tuning simply isn't possible when using general-purpose chips built for a wide variety of customers. Then there's the global regulatory landscape. Export controls have introduced new uncertainty around which chips can be purchased from international suppliers. For companies deeply involved in AI research and cloud services, these limitations can disrupt long-term planning. Baidu's strategy isn't about replacing foreign chips entirely. Instead, It's about reducing the risk that a new policy or supply constraint could delay a product launch or restrict access to necessary hardware. Designing chips domestically gives Baidu a more stable path forward, one less affected by sudden shifts in international rules. But building chips in-house offers another advantage, one much more technical, but just as important. Baidu's AI workloads are unique. Its recommendation systems process massive amounts of user data. Its search engine uses deep learning models that must respond in milliseconds. Its generative models run across huge distributed clusters. These workloads place different demands on memory bandwidth, compute density, and energy efficiency than what a typical consumer GPU is designed for. By controlling the architecture of its own chips, Baidu can optimize them for the exact patterns of data movement and computation its services rely on. That kind of specialization isn't a luxury, it's a competitive edge. This tuning also allows Baidu to align its chips with its internal software frameworks. When the company upgrades its machine learning stack or deploys more advanced AI models, it can ensure that the hardware roadmap supports those changes. The result is a tighter loop between hardware and software development, improving performance while lowering costs. For a company operating AI at massive scale, even small percentage gains translate into huge real-world impact. Another benefit of in-house chip development is long-term strategic flexibility. AI is evolving rapidly, and every year brings new model architectures, new inference techniques, and new requirements for compute. By designing its own processors, Baidu can adapt to these shifts faster than if it relied entirely on third-party chips. Instead of waiting for hardware vendors to support new AI techniques, Baidu can design accelerators that match its own research trajectory. This ensures the company's hardware continues to support cutting-edge models without delay. All of these factors – cost, supply stability, regulatory pressure, technical optimization – combine to form the logic behind Baidu's decision. Building chips in-house isn't just about avoiding short-term issues. It's about constructing a foundation that supports the company's entire AI future. As models grow larger and AI becomes more central to Baidu's products, the company needs hardware it can depend on. In-house chips make that possible. This move also positions Baidu more strongly within China's technology ecosystem. Domestic demand for AI computation is rising, and companies that can provide reliable, well-integrated hardware gain significant strategic value. By investing early in its own chip division, Baidu ensures it has a seat at the table as China builds a more self-sufficient AI infrastructure. In the end, Baidu's shift to in-house chip design reflects a broader change sweeping the tech industry. The world's biggest AI companies are learning that algorithms alone aren't enough. True scale comes from mastering the hardware that powers those algorithms. For Baidu, building its own processors isn't a side project. It's a long-term commitment to stability, efficiency, and independence in an era where computing power determines the pace of innovation. If you want more videos that dig into the hidden infrastructure of AI, chips, data centers, and policy, make sure to subscribe. Your support helps this channel keep doing deep, research-driven content instead of quick hype. Investor Gold Rush. In the AI boom, investors are hunting for the hardware equivalents of gold, the chips, servers, and infrastructure that make every algorithm run faster, smarter, and at scale. While much of the media spotlight focuses on the flashy AI applications, chatbots, generative image tools, or self-driving software, the real profits often lie in the underlying machinery that powers these innovations. For Kunlunxin, Baidu's AI chip subsidiary, this perspective has shaped both investor enthusiasm and strategic financial planning. The company, recently valued at roughly $3 billion, is positioning itself as one of the critical suppliers, or picks and shovels, of the AI gold rush, offering tools that enable not only Baidu's internal operations, but also broader industry adoption in China. The valuation reflects a growing recognition among investors that AI chips are not merely hardware, they are foundational infrastructure. Large AI models, from search algorithms to sophisticated generative models, require immense computational resources. In this context, Kunlunxin's processors, optimized for these demanding workloads, represent a rare combination. cutting-edge domestic hardware designed to mitigate the risks associated with reliance on foreign GPUs, yet tailored for the scale and specificity of China's AI ecosystem. For investors, this dual advantage, technical capability plus strategic positioning, makes Kunlunxin a highly attractive target, even before any public listing. Baidu's reported plans to explore a Hong Kong IPO for Kunlunxin align neatly with this investment thesis. Choosing Hong Kong as the primary venue offers several strategic benefits. The city's stock market is perceived as relatively more accessible for tech spin-offs from mainland China, with regulatory structures that are generally viewed as more predictable for domestic companies than the US markets. By listing Kunlunxin in Hong Kong, Baidu can secure significant capital infusion while maintaining operational and strategic control within a friendlier regulatory environment. This allows the company to continue developing its hardware roadmap without the added pressures that come from a listing in markets subject to stricter international oversight or geopolitical tensions. The IPO is not just a fundraising exercise. It signals confidence in the long-term trajectory of AI chips within China and globally. Analysts note that the move positions Kunlunxin to accelerate research and development, expand production capacity, and potentially reach enterprise customers outside Baidu. Capital raised from public markets can be channeled into scaling up manufacturing, enhancing chip architecture, and building a more robust software-hardware ecosystem. Such investments are critical because domestic AI chip manufacturers in China still face challenges in matching the most advanced foreign processors in raw performance metrics. Yet, strategic funding enables Kunlunxin to close that gap over time while solidifying its foothold in the local market. The framing of AI chips as the picks and shovels of the AI revolution captures an important market dynamic. Rather than betting on any single application or AI model, investors are increasingly focusing on the infrastructure layer that underpins all AI workloads. Chips are a linchpin. Without high-performance silicon, large-scale models cannot train efficiently, and inference at scale becomes prohibitively expensive. Kunlunxin, therefore, occupies a sweet spot. Its growth is tied not to one product, but to the expansion of AI adoption in China, across sectors ranging from internet search to cloud computing and enterprise AI solutions. This stability and predictability make the company's IPO highly attractive to investors looking for exposure to AI without relying solely on speculative app-level bets. The timing of the IPO also reflects broader market and geopolitical considerations. As US-China tensions over technology exports intensify, particularly in the AI sector, domestic alternatives like Kunlunxin gain strategic importance. By developing and monetizing its own AI chips, Baidu reduces dependence on foreign suppliers, mitigates the risk of supply chain disruptions, and creates an investment vehicle that aligns with national priorities for technological self-sufficiency. Hong Kong's IPO market, with its deep liquidity and proximity to mainland China, provides an optimal platform for attracting both domestic and international capital, while maintaining control over the company's strategic direction. Investors are not solely motivated by regulatory or political factors. The underlying economics are compelling. Kunlunxin's chips are purpose-built for the demanding compute workloads that define modern AI. As AI adoption grows across industries, from healthcare to finance to autonomous vehicles, the demand for high-performance, reliable AI hardware is expected to rise exponentially. A successful IPO provides Kunlunxin with the financial flexibility to continue innovating and capturing a larger share of this burgeoning market. Capital from public investors accelerates research, supports scaling of production, and allows strategic partnerships, all of which are critical for competing with both domestic rivals and global heavyweights like Nvidia and AMD. Ultimately, the $3 billion valuation and planned IPO highlight how Kunlunxin sits at the intersection of technology, strategy, and capital markets. The company is not just a chip maker. It is a cornerstone of China's emerging AI infrastructure, providing the compute power necessary to fuel both Baidu's services and a wider ecosystem of AI applications. Investors understand that in a world increasingly defined by AI, controlling the silicon backbone can translate into outsized returns. By going public in Hong Kong, Kunlunxin positions itself to capture that value, delivering both strategic and financial upside while helping define the future of AI hardware in China and beyond. Domestic over global. In a world dominated by Nvidia and AMD, Kunlunxin has chosen a different path, prioritizing stability, local support, and tailored performance for Chinese enterprises rather than chasing global GPU supremacy. While Nvidia and AMD have built decades-long reputations for delivering high-performance GPUs that push the limits of compute power, Kunlunxin's strategy is less about outright speed and more about reliability, compatibility, and sovereignty. For Baidu and other Chinese organizations, the ability to run AI workloads without interruption and to rely on a domestically controlled supply chain has become a top priority. This pragmatic focus is what differentiates Kunlunxin in a landscape that often equates success with global dominance. Kunlunxin's approach is deeply rooted in China's broader AI and technology strategy. The country has made it a national priority to develop a domestic semiconductor ecosystem, reducing reliance on foreign hardware and mitigating risks associated with export controls, trade tensions, and supply chain disruptions. While Nvidia and AMD remain unmatched in certain high-end performance benchmarks, their products are also subject to geopolitical constraints. By designing chips domestically, Kunlunxin ensures that critical AI workloads, ranging from natural language processing to large-scale data analysis, can run uninterrupted on reliable, homegrown hardware. In practice, this focus on availability and support is often more valuable to domestic customers than having the fastest possible silicon on the market. Another key differentiator is the integration of hardware with local software ecosystems. Kunlunxin's chips are designed to work seamlessly with Baidu's AI frameworks, as well as other Chinese AI platforms, which allows for efficient performance tuning without the overhead that often comes from using foreign GPUs with locally developed software. This tight integration helps maximize performance for the models most relevant to the Chinese market, even if the chips do not match the peak computational output of Nvidia's A100 or AMD's MI300 series. By prioritizing alignment with domestic software and enterprise requirements, Kunlunxin can deliver a solution that is good enough in performance, but optimized for stability, long-term support, and predictable deployment. The emphasis on local support extends beyond software integration. Kunlunxin provides services and maintenance that are closely aligned with domestic operational needs. In comparison, foreign GPU vendors often require customers to navigate international support channels, deal with shipping delays, and contend with complex warranty or replacement processes that can be hindered by trade restrictions. For Chinese organizations that rely on uninterrupted AI processing for applications like search ranking, recommendation engines, and generative AI models, the assurance of immediate local support is a major advantage. It reduces downtime risk and ensures that critical infrastructure is under the control of companies familiar with domestic regulations and market conditions. Kunlunxin's domestic-first strategy also reflects broader market realities. While global GPU manufacturers dominate the high-end AI market internationally, the vast majority of AI workloads in China do not necessarily require the absolute cutting edge. Many enterprise applications, research projects, and commercial services benefit more from consistent performance, cost predictability, and regulatory compliance than from achieving marginal gains in speed or efficiency. By targeting this segment, Kunlunxin taps into a large and growing domestic market that values accessibility and reliability over raw computational benchmarks. Moreover, Kunlunxin's positioning mitigates supply chain vulnerabilities. Global GPU demand has surged due to the AI boom, and shortages or export restrictions can leave organizations stranded without critical hardware. By supplying chips domestically, Kunlunxin reduces dependency on foreign suppliers, helping Chinese companies maintain operational continuity even amid geopolitical tensions. This local-first approach has strategic implications. It not only safeguards domestic AI development, but also reinforces China's broader goal of technological self-sufficiency in key sectors. Financially, the strategy makes sense as well. Investors recognize that dominating the global GPU market requires massive R&D investment, aggressive international marketing, and continuous performance leaps. an undertaking that carries high risk and uncertainty. By focusing on the domestic market, Kunlunxin can grow sustainably, capture a significant share of China's expanding AI chip ecosystem, and build credibility as a reliable supplier. This measured approach aligns with both market demand and investor expectations, offering a balance between growth potential and risk management. Ultimately, Kunlunxin's mission is less about surpassing Nvidia and AMD on global performance charts, and more about ensuring that Chinese enterprises have dependable, locally supported hardware for AI workloads. Its success will be measured not in worldwide GPU market share, but in how effectively it serves domestic customers, supports large-scale AI infrastructure, and contributes to China's technological self-reliance. In doing so, Kunlunxin demonstrates that in the AI chip race, dominance can take multiple forms, and for many Chinese organizations, reliability, local integration, and strategic control are more important than raw performance numbers. Silicon powers AI. The AI revolution is no longer just about clever code. It now hinges on who can design, manufacture, and deliver the silicon that powers massive models at scale. While algorithms and software frameworks have historically dominated headlines, the underlying hardware, the processors, accelerators, and memory architectures, is increasingly the determining factor in who can lead in AI development. For China, companies like Kunlunxin and More Threads represent more than just business ventures. They are strategic pillars in building a domestic AI stack that the country can control end-to-end. Kunlunxin, backed by Baidu, and More Threads, a rising GPU startup, are part of a broader national push toward technological self-sufficiency. By expanding domestic chip capabilities, China reduces dependence on foreign suppliers such as Nvidia and AMD, which face geopolitical constraints and export controls. This effort not only secures the compute backbone for AI research and deployment, but also gives domestic firms a competitive advantage in scaling AI applications across industries, from search engines and recommendation systems to generative AI and cloud services. In essence, these chipmakers are enabling the domestic AI ecosystem to operate with fewer external bottlenecks, creating a more resilient infrastructure. The strategic importance of these developments cannot be overstated. AI models, particularly large language and generative models, require enormous computational resources. Even the most sophisticated algorithms cannot function without high-performance silicon to train and infer at scale. Companies that control their hardware can optimize performance, reduce latency, and better manage energy efficiency, all of which are crucial for commercial and research applications. For China, having a growing cadre of domestic AI chip producers means that the country can run its largest models, maintain AI research momentum, and deploy services reliably without relying on potentially restricted foreign technologies. This shift changes the nature of competition in the AI race. Success is no longer measured solely by algorithmic breakthroughs or software sophistication. Companies and countries that can design, control deployment, and scale the underlying silicon have a decisive advantage. Hardware not only accelerates model training and inference, but also influences which applications are feasible at scale. In this context, Kunlunxin and More Threads are not just suppliers, they are strategic enablers, shaping the contours of China's AI capabilities and ensuring that its domestic AI ecosystem remains robust, scalable, and competitive. The rise of domestic AI chipmakers also carries implications for global competition. As China gains more control over its AI stack, the AI landscape becomes less dependent on Western chipmakers, potentially shifting supply chains, partnerships, and competitive dynamics. Global companies may need to adapt to a dual-track system, one ecosystem dominated by US and European suppliers, and another increasingly self-contained within China. This bifurcation could influence pricing, technology standards, and the pace of AI innovation worldwide, underscoring the importance of silicon as a strategic asset. Moreover, domestic control over AI infrastructure strengthens national policy objectives. Governments and corporations alike recognize that AI is not just a technology sector. It is a strategic field that impacts economic growth, security, and global influence. By investing in domestic chip development, China safeguards its AI capabilities against supply disruptions, sanctions, and geopolitical risks, while also fostering innovation that aligns with local market needs and regulatory frameworks. Kunlunxin and more threads, in this sense, are critical nodes in a broader strategy to achieve technological sovereignty in AI. Ultimately, the growing influence of domestic AI chipmakers demonstrates that hardware mastery has become a central determinant of AI leadership. Algorithms alone cannot secure dominance in a world where massive models demand equally massive computing power. As companies like Kunlunxin and more threads scale their operations, they are not merely producing chips. They are building the foundations of a domestic AI ecosystem that China can fully control. In this new paradigm, the race for artificial intelligence is as much about silicon as it is about software, with the companies producing and delivering the hardware emerging as essential architects of the AI future. Behind every AI breakthrough is the hardware that drives it. Will China's chips change the AI game? Is hardware now more important than algorithms? Drop your thoughts in the comments below, and don't forget to like and subscribe for more AI insights.